let's dive into these charts. So I want to go over the best times to buy Bitcoin, right? So the best time to buy Bitcoin was yesterday. The even better time to buy Bitcoin was when you first heard about it, however long ago. And then the next best time to buy Bitcoin is going to be tomorrow and every day you can after that. All right. But let's take a look at these charts. So I'm on stock charts right now. I got Bitcoin pulled up, and as you guys can see, I got a few things marked out. So the only thing I have on my chart is a naked chart, and I have the RSI up here. If you're not too familiar with the RSI, go do a quick little Google, go to YouTube, check it out. In simple terms, RSI determines if something, a stock, in this case Bitcoin, is either overbought or oversold. So anything that's above 70 is considered overbought. Anything below 30 is considered oversold. All right. So if we take a look at this chart, and this is a daily period, and we got a year range. So I'm gonna show you guys a few different other charts so you can take a look. So everything that I have marked out is below 50. So if you see this dotted line right here in the middle, this is the 50 RSI. 70 is this line right here. 30 is going to be this line going right here. So in these squares, I have every time RSI is below 50, and the circle right here is when the RSI breaks below 30. So if we go back in time, and if we take a look that every time that the RSI was below 50, these were good signs to accumulate Bitcoin during these time frames. So if you accumulated, let's say you're a person who DCAs, right? You like the dollar cost average, whether it be daily, weekly, bi-weekly, monthly, whatever the case may be. Anytime we're below 50, history tells us that is a good indicator of a good time to buy. You're buying in at a quality time, right? When you're buying, when you see above 70 where it's green up here, it can, go above 70. When it goes above 70, that doesn't mean that it's gonna reverse and go to the downside. And when it's below 30, it doesn't mean that it's gonna reverse and shoot up. That's not necessarily the case, but it is a good indicator if something is getting too hot or too cold. So as we can see right here, during this time period when we got super hot above 70 RSI, we still kept running up. All right. So boom. So back down here in this area. So if you were accumulating in this area, and if you go over here, you can see what the price was during those times. So anytime accumulating in here, we'll just call this about 55,000, because on the low end, 52,500, on a high end about 60,000. So we're gonna kind of average that out to about 55,000 would be your average buy-in price if you were accumulating during this time. Okay, and then after this circle, we go back up here, we see this dotted line, it gets above 50. The RSI gets above 50, so we're not accumulating. We dip back below 50 again. It's in this range right here. We'll call this about a 60K accumulation phase, right? And then boom, right here, we run up past 50. That's all this right here is running up, running up, running up, and we're just holding. So if you go back in history and look, the people who have the most gains are the people who are holding the longest periods of time. So Bitcoin is not something that you want to speculate, you want to hop in and out of. It's more of a buy and wait 10 years, right? But we want to at least try to be on the better side of buying so we can get the best price that we potentially can. No one knows when it's going to run up. No one knows when it's going to crash. But if we just kind of use this metric only to kind of set up our buys, it would give us a good gauge that we're at least buying in at a good dollar cost average price, right? So things are kind of in our favor. So we see from right here all the way to right here, we don't dip below the 50 RSI again. Okay, so we let our accumulations at the 55K and the 60K, we let it run up. We see right here at this peak, it's 100K. And then right here was when we cracked about 109 and made a new all-time high right here. And if we go a little bit more, we took a nice little dip and we broke back below this dotted line right here. This is back below 50. So this is our accumulation phase. So boom, if we're accumulating right here, we're dollar cost averaging, we're getting in at about a 95,000 price. We run up a little bit above the 50, we dip back below it, and then boom, we're accumulating again at around 93,000. And then we have a little run up, and then this whole phase right here is all below 50. So this entire phase right here, we're accumulating all the way to here until we rise back above 50. So this is what I call the shaboing boing, right? This is where you want to go very heavy. So if you're dollar cost averaging, let's say you're doing weekly buys of Bitcoin, but you're stacking up your cash on the side, you're waiting for it to dip below 50, and then we have a shaboing boing. You want to go heavy. You want to make big purchases anytime we dip below 30. So if we were making big purchases below 30, we're accumulating at about 80,000 or so, give or take, right? So we kind of dipped to like 7750 in this range, and then we shot right back up, but we're still accumulating after that, right? Because we're just doing back to our regular accumulation. So during this whole accumulation phase that, for our DCA, however you have it set up, your average, buy price would be about 88,000. So you can see we dipped down to 75,000 and a high of about 95,000. So we had our really big purchase when we dipped below 30, and then boom, we're back to our whatever our daily, weekly, monthly buys are set up to be for this period. And then you see we run up and we have a long period above 50. We even crossed above 70 a little bit. This is when we run up. We have our next all-time high, and then boom, what do we have right here? Back below 50 RSI again. So we're accumulating about 102,000. And then we have a little run up, and then we're back below 50 again, but we don't hit that 30 again. So boom, we have, two accumulation phases of about 102,000 would be about your average price in this region right here. Then we run back up, we get hot again, and then we come back down, and we're accumulating right now. So right now we're in technically an accumulation phase. So whatever your DCAs are, whether it be weekly, bi-weekly, monthly, whatever the case is, this is the time that you want to be accumulating. Based on history, we see that these are great times that we want to buy in. All right. So let's go to the next chart. Let's take a look. So now we went back a little bit further. So we're still on the daily, but now we're back 5 years. So the first chart was only a year time frame. You can see down here we got our year. Now let's go back about 5 years. So as you can see, we have some, all these are going to be below 50 RSI, right? All the squares are below 50 RSI. I didn't do the shaboing boings, but we can see them right here, because if you go to the side, see where our 30 RSI line is at, we can see right here, boom. I didn't do this one because this falls in our yearly one. That's shaboing boing right there. So this shaboing boing right here, and I put some squares on these ones. These are the ones that we want to go heavy, right? So you want to have your setup, however you're set up, have your cash to the side, waiting for these great times to buy. These are great accumulation phases. So if we go back to the very first one for this time frame, we're looking at about June time frame of 21 is when we dip below the 30 RSI. So we want to make our big purchases here. So like I said, in this square, we're accumulating. We're back to our DCA. We're dollar cost averaging. We're getting in. The RSI is below 50. It's not technically the best time to buy, but we know based on history that it's a good time to buy. So if you were to go back, mark out all these buys and kind of get your average and see where we're at, you'd be up really nicely on these buys, and you were buying in at pretty much a good discount, right? We want to buy in on those discounts, and then where these blue triangles are at, this is when the RSI dipped below 30. So within the last 5 years, we've only had 1, 2, 3, 4, 5, 6, 7, and right now 8. So we've only had 8 shaboing boings to really stack up huge. Do whatever you need to do to get that big lump sum of cash to make those big buys. Let's go to the weekly chart. So if you're not a person who, your DCA wants to be a little bit different, you would rather wait for the weekly because you don't want to buy so much. You just want to keep that cash in whatever you keep it in, make sure it's liquid enough to be able to pull that trigger when a shaboing boing hits. you want to have it ready to go because we don't know how long those shaboing boing dips will happen. Okay, so if we go on the weekly chart, so before we were on the daily 5 year range and also the daily yearly range. Now we're taking a look at the weekly, and then we're going out about 5 years just to take, get a broader picture of how things look. So in the triangles are when the RSI dipped below 50. So boom, we see our 50 RSIs right here. We have our dotted line that goes all the way across. So you can see anytime we dip below 50, I tried to highlight it and mark it out. So this phase right here was a great accumulation phase. We had our shaboing boing right here because we dipped below 30 RSI. We know that's a great time to buy. You're getting in at a great discount. So many people are mad or because they weren't able to buy in during this time frame. We can't worry about the past. We can't hop in the time machine, go back and make those buys, right? If any of us could do that, we would all do that. So we have to just get all this information and use it to our advantage in the future, because the same things that have happened before are going to happen again when it comes to, looking at the RSI and trying to get better buys that you can. So here we dipped below 30 RSI, great accumulation phase. Boom, we ran up. You got in at a discount. It ran up. It took a hit. We're accumulating from November of 21 all the way through January, February-ish of 23. So you just keep, like I said, whatever your buys are, okay, I'm getting in at a discount. Yes, it's taking a hit. It's taking a hit. It's taking a hit. Boom. When we have our shaboing boing, we go heavy. This is where we make a big purchase because it's below 30 RSI, and we've been accumulating. We know that's what we're looking for. That's what we're waiting for. So boom, we're still below 50, and so we're accumulating this whole time. However you do, monthly, daily, weekly, whatever works for you. Just make sure you're constantly accumulating. And then, like I said, we're buying and we're holding. And then we have a little run up. We don't get too hot. We dip below 50 again. Another good time to accumulate. We run up heavy. We have a nice little pullback here. We accumulate again. This is a nice little accumulation phase right here. And then boom, we run up again. We dip back a good, like a stairmaster, going up, going up, going up. We want to buy. We want to buy at those good times, those good dips that we get. So here's a 10-year chart to kind of look back more. So if you're just looking for those heavy buys only in the last 10 years on just the weekly, we've only had 2 shaboing boings, right? So you would have had a good shaboing boing right here in about November, December of 2018. And then you also would have had another good shaboing boing here in about June, July, August of 2022. So you can break it down and use this information however you would like. But just make sure this is something that you're paying attention to. It's something very easy. You don't have to worry about too many other technical indicators. You don't have to get fancy with it. You can stay down if you would like to accumulate more often and get rid of those Diddy dollars. You can accumulate, you got more buy signals on the daily charts than you'll have on the weekly. But at least hey, when we have a shaboing boing on the weekly, for sure it's going to be the same. We're going to be below 30 on the daily as well. And that you're having a great buy at that time. So use this stuff to your advantage. This is something that you can just go check every day. Stock charts is free. You can go see it right now based off previous history, previous data. You can see we're going back 10 years. Even if we, take the daily chart and go back 10 years. Let's see. Let's go ahead and update this and go back 10 years. You'll have, like I said, on the daily, you'll have more opportunities and more shaboing boings than we do on the weekly. And so, like I said, it just depends on what your preference is. Are you trying to get rid of those Diddy dollars as quick as you can and try to accumulate as much Bitcoin as you can at the best price? Or are you kicking back, watching the weekly, waiting, accumulating when we're below 50 on the weekly? Or do you prefer to wait till we're below 50 on the daily? Or are you just stacking up your cash on the side, waiting until we dip below the 30 on the daily, or are you waiting until we dip below the 30 on the weekly? So like I said, something very simple. You don't have to be no great trader. You don't have to be no mathematician. You don't have to be none of that to be able to go read this stuff and realize, okay, based off previous history at these times, if I would have bought at these times and look at where we're at now, you can know that you'll be doing pretty good, and you would have good your dollar cost average price would be a nice price, and that's the name of the game. You want to buy in at the best possible price. So hopefully this helped you out. If you have a different strategy or if there's something else you look at, let me know in the comments. Let me know what you guys check out. But